This is Agronomy Moment. I'm Wendell Cohen. All right, everybody. Welcome everybody back to Agronomy Moment on our podcast. We have a special guest today, Kevin Van Trump with the Van Trump Report. And we're going to get started talking about some world events and markets. Those of you who know Mr. Van Trump, you know he is very connected with the world and what's going on and has his report. If you're not subscribed to him, I highly recommend jumping on their website and checking it out. We've done that for a few years. My dad got me started on listening to the report, and we feel like it's a fantastic piece of information. Also, I thought I'd mention here, Kevin, the Ag Swag thing. The shirt I'm wearing today is coming from some of Jordan's work, this quarter zip. I really like it. And the hats he's done, it's fantastic. It's another, I see you're wearing a jacket from Ag Swag as well. So without further ado, tell us a little bit about you, Kevin.
Yeah, I grew up right down the street from you guys. So I grew up, went to school at Raymore Peculiar, married my high school sweetheart. I worked for the NFL out of college. And, hey, luck has it. My wife ended up getting a lot higher paying job than I had. I had a fun job. We traveled all over the place, but hell, I wasn't making much money. And my wife ends up landing a pretty good job. And we didn't come from any money. My dad was a sheet metal guy. And I worked on a lot of farms out throughout the area, and my grandpa had a farm. And we ended up in Chicago, and I was about 6'4" and about 300 pounds at the time, out of school and bull strong. And my buddy said, "You got to get in the trading business." And hell, I went and interviewed, and they're like, "Damn, you're a big guy." They said, "Do you mind fighting a little bit?" And I said, "Do I mind fighting?" I said, "Hell, that's all we do back home on the weekend, go out to the local bars and getting a little crazy." So they said, "No, we want to hire you to be on the floor. Everyone will see you, And so, because I was tall and big, everyone could see you. And so I started at the very bottom as just a runner or a clerk. And then I moved over and started to meet a lot of the old guys from the industry that were big traders in most. I started off trading Swiss francs, D-marks, foreign currencies. Then I started trading 5 and 10 year notes. But then I kind of found my way when I kind of hooked up with a lot of the guys trading corn, beans, wheat, cattle, things of that nature. And I'd always come back home here when I'd come back to visit my folks and go up to the local diner, things like that. And they'd be like, "Okay, city slicker, tell us what you learned up there, and take some." So I'd take some of the fancy terms on Wall Street and that were being tossed around inside the trading floor and things and break that down pretty simple format. So once the RFS went into play in about '07, '08, a lot of hedge fund guys from New York, and there were quite a few in Boston and some out west that were calling me. They didn't they didn't understand the ag space. They didn't really, never been in a cornfield, never been, didn't understand biodiesel. And so I kind of tried to bridge the gap in the lingo for both. So I just started jotting down my own notes, and hell, the next thing you know, it started spreading all over the place. And so I
Yep.
got lucky and made some investments, made a lot of ag investments kind of early when I'd have some luck on some trades, and I'd flip it into other farms or joint ventures with farms here in the U.S. and I'm partners with farms in South America and got
Yes.
some ethanol facilities and plants and CNG facilities. So I wake up every morning just like everyone else, trying to figure out where the hell these markets are going to go and
Yeah.
and what I'm going to do with my investments for our family in the ag space. So that's really about all there is to it. Like I said, I think you hit it on the head. I was just lucky and met a lot of the right people who then connected me with more of their people. And I think it was kind of an anomaly in Chicago and in Wall Street.
Yep.
Good, honest, hardworking kid. I mean, I just don't know if they saw a lot of that come down the pipe. Most of the guys I worked with were like Harvard guys, MIT guys,
Yep.
like really, really sharp people. And I maybe just brought a little different twist to the party. So, yeah.
Yep. No, and I think there's a lot of power and value in being able to pull from multiple sources and not have one pool of thought. And I think that's what your report does. talking about the situation we have going on here in the world. We're going to start global. Maybe we'll bring it back down to more of a local level. With increasing hostility between Taiwan and China, is our first question. How does that conflict and the U.S.'s involvement play out in our future grain prices? Do you see sanctions as a possibility in the future?
Yeah, I mean, that's a huge black swan. I mean, that's why all of us are a little bit nervous and hesitant on the bean side of things. I mean, you're talking probably you'll have a dollar, $2 knee jerk to the downside if we go if China comes over talk or decides to militarily move and make a move on Taiwan, and we have to then whatever the hell happens, it don't matter what happens. If China makes
Yeah.
the move, the market's going to get spooked and they're going to probably break aggressively just
Yeah.
because either we do something militarily or we do something from a sanction standpoint. Either way, the market's going to freak out about it. So, we saw this back in the 90s when we were trading. I believe it was, we slapped some, we slapped some sanctions on Chinese rubber and tires
Oh,
to try and help benefit some of our tire manufacturing that was losing some serious ground back then. And all of a sudden, China kicked I mean, it was a ton of cargoes of cotton. They let it just sit at the docks and didn't inspect it and said it was bad. And I mean, cotton prices got rocked. So I
mm-hmm.
remember trading through that debacle. So I suspect you could see something similar play out. I mean, China's definitely voicing their opinion that they want us to keep our nose out of what they deem their business with
Yes.
Taiwan. So you're dead on. I mean, you're definitely telling your listeners where there could be a black swan. I've been on several calls with hedge fund guys saying the same thing. Nobody wants to get a super aggressive bean position because we feel like we're just not sure. I mean, that's why you see the funds. They're not real aggressively long beans, and they haven't been for a while. I mean, they were
Yeah.
long 250,000 contracts, but hell, they were damn near flat the bean market. And I think because everyone's tiptoeing around the Chinese-U.S. relations, and we're just not sure if that how that's going to play out. So a
Yeah.
little worrisome. You're on the right track for sure.
Yeah, and it seems like I said like just a couple years ago when we were dealing with some of the back and forth with some of the tariffs that was going on, is that it's hard to predict. It's hard to, this is a challenge, like you mentioned, a black swan event where two world leaders can get in front of a camera and shake hands and change the markets versus other fundamentals that are happening, such as weather and forecasting. Next question is, what is projected by those that know what is happening in Asia front right now? Some analysts say the food security inside this communist country of China is quite poor, and there's an issue going on. I'm trying to take the flip side of this dialogue, the positive side possibly. Have they stockpiled enough grain, or do we believe that South America has enough for what they need?
Yeah, I mean, it just depends, I guess, which market we want to look at. I mean, corn finally traded down below the price of wheat um, fairly recently, but corn prices are starting to rebound back in the last few sessions in China and are making a little bit of a comeback. And the hog margins have improved. From a soybean perspective, they've been going hand to mouth. Kind of, they had a policy shift. It felt like during COVID, where they knew inflation was going to be hot, and they felt like food inflation was going to be a worry. So they kind of started going hand to mouth. And it feels like
Mm-hmm.
after Trump lost, they started to deal with Biden. They didn't really want to be aggressive buyers like we had seen, and they're more hand to mouth. Now that worries us because what they were saying coming out of China was that they didn't want their importers buying into the highs because they were just fueling their own
Yes.
inflation. I mean, it was like they were pouring gas on their own fire. And so
Mm-hmm.
they said, let's just go hand to mouth. They backed off their purchases. The problem is Brazil and Argentina and Paraguay. I mean, they had good cooperative weather early. They got the beans in early. So it's going to shrink our window of opportunity for U.S. exports.
Yeah.
We were hoping we'd see some bigger purchases come in early on. Crush margins have improved dramatically in China. They're at good strong levels, but they're still not buying in big heavy doses. So we're worried they may want to try and limp it along until they're going to get some South American supply on hand
Yeah.
early, late, I should say, late this year, early next year. So it's just our window of opportunity that has shrunk. I feel like they wanted to import U.S. corn and they want to buy more South American beans. They're crushed for some reason. They get better crush dynamics out of the South American beans than they do U.S. beans.
Yes.
So we've been thinking they're going to bring in more corn from the U.S. It just really hasn't played out as of yet. So we'll see.
And and just a quick note there on you're talking about crush, they get better protein and oil values out of that. Is that what you're meaning by better crush
Yes.
numbers? Yeah.
Yes. Uh-huh.
Talking about South America, what about their politics? I get a little confused. I follow, and now recently in the U.S., we seem to have a little bit of our own drama. But typically, I know in the past, it seems like I read the news. There's the truck drivers are striking or threatening to. The port workers in Argentina are striking. What's the dynamics that goes on down there, or what am I missing to understand South American politics? They lead me a bit.
Yeah, I think it's more Wild West. It's just like our investments in South American agriculture. I mean, those have been a huge, just put it mildly, kicking my ass. They have not, they've never panned out like they look like they would on paper. On paper, if you said it real fast, it sounded like a great idea. We had several different farms. One operation we were going to grow eucalyptus trees. I mean, eucalyptus trees grow about 70 feet in the air. You cut them down. They do it
Mm-hmm.
about 7 times in their life cycle, and just straight sticks. And we thought, what the hell? I mean, people aren't going to come in and steal eucalyptus 70-foot trees, and we won't have to have that much work. But then we
Yeah.
decided we got into we were getting 60, 70 inches of rainfall. And, you start getting into where you can do rice and you can do corn, beans, wheat, and then it just became logistic nightmare. Just
Yeah.
everything we take for granted here is just not how it plays out there, at least from our experiences. And like I said, I've the politics is crazy, and I tell a lot of people, as we lose market share to South America, which we have and continually looks like we will do.
Mm-hmm.
I kind of think I don't want to say it's good, but I think it could be beneficial to price in some degree, just meaning as the world becomes more dependent on South America,
Yep.
I think you could see political snafus and problems arise throughout any given growing season or throughout a year where just who the hell knows? Like you said, you could have complete trucker strikes, you can have labor and port dock strikes, you could have major turnover in the government. They
Yep.
could really slap some high export tariffs on. So, I don't see it as doom and gloom as everyone says. The real problem, though, to let you know, uh, when when they're building out the infrastructure in South America, just like the new ports that are going up in northern Brazil and everything like that,
Yep.
we haven't built a new facility here in the U.S. for years and years. I mean, we were never set up. We didn't have the vision because no one thought we were just going to feed the entire world. So a lot of our delivery points are around like nooks and crannies down by rivers and beds and bottom. Well, they're
Yep.
setting up theirs to export to the world. And so some of these ports and things are just massive and they're convenient and they're easy. And so maybe 30, 40 years out, I mean, they're going to have a decided advantage because of that logistical
Sure.
ability that they've set up. Yeah, so could be
Yep.
tricky.
Yeah,
Yeah.
for sure. And I felt like real infrastructure such as waterway expansions here and port expansions is probably in my opinion, been some of the best ways to help a farmer in agriculture and other industries for that matter. Thank you.
Yeah, you're right.
With the response that we've seen in our ag community prices post COVID-19 outbreak and the relief packages that followed, how does a government's monetary policy affect your planning and forecast models?
Well, I mean, I guess if you want to talk, we want to talk the clean energy or we want to talk climate change. Is that what you're alluding to?
Um, well, what I'm alluding to is maybe even as it relates to the potential. I'm going to go ahead and have a follow-up question: is how does a modern farmer position himself to best capitalize on inflationary environments? So, commodities are going up; they're higher than they were, but so is everything else. And how do we position ourselves in ag?
Yeah, the issue with commodities is it's entirely different than the stock market. I mean, and it's tough sometimes for like my dad or folks that aren't in the investment space all the time. I mean, stock
Hmm.
market's like a voting machine. I mean, it's votes cast on popularity. Supply and demand really isn't a key ingredient, so to speak. And if you think about it, you've had 85% of all the companies that have ever been on the stock market go away. I mean, they're off the
Yes.
exchange. They
Yep.
delist. They delist. So it's like, of course, you're always going to continue to go higher and probably higher and higher because you lose the bad companies or the companies that are struggling. They go off the list. So
Sure.
hell, I mean, over time, yeah, the stock market's going to keep going higher. So when everyone looks at the stock market, and they use in your brain references like you
Okay.
would corn, and you're saying, "Oh my gosh, the stock market's way overpriced." Well, no, we've gotten rid of all the bad companies, and you only got the good ones right now in there. So,
Yeah.
as a general rule,
Hmm.
but when you look at commodities, especially corn, beans, wheat, things of that nature, I mean, it's the same type of thing that we always see happen. We're going to overplant, and we're going to get oversupplied, and
Yep.
then so the market, and I tell everyone this, and they have to understand it. When the market deems it's oversupplied, so you go back pre-COVID, and we're trading we're down $3 level in corn, and we're trading sub $9 in beans. The
Yep.
market deemed it was oversupplied. So any market that feels it's oversupplied,
Yep.
all it does is it seeks out to find the high cost producer and then rip their face off and get them out of the business. Now, for years, the highest cost producer was never here in the United States. Now, just in the last 10 years, that's changed.
Hmm.
Oftentimes, when we go back to those levels where we're really low, you're seeing a lot of U.S. producers get knocked out of the game because their
Yep.
cost of production is simply too high globally. So, right now the market feels we felt like in beans we were maybe going to be undersupplied for a while. Now the balance sheet's moving higher and moving back higher, and I think it's probably going to continue to move higher into year end. It has me a little nervous. Corn, same type of scenario. We thought we were going to get to a level where we were going to be really tight, sub 800 million. It
Yep.
doesn't look like that's going to even come anywhere close. Now here we go back and it feels to me that the farmers are going to plant some big acres next year across the board in all kinds of crops. And here we'll go. If weather cooperates, we're probably
Hmm.
back in an oversupplied environment. So I'd be hesitant to think that, prices are going to stay elevated here for a real extended period. And I tell people, and this is the one that really freaks people out is, I tell my kids as a trader, an investor, or a business owner, you
Hmm.
have to know you have to know what race you're putting your dog in. And most producers, the race is higher yields, lower prices. And not a
Yes.
lot of people don't understand that. That's where we're headed in life. I mean, you look at TVs, you look at
Yes.
anything that has technology pouring into it. Technology inherently drives it's deflationary and drives prices lower. Look at
Yes.
what's happened in the energy space. We're
Yep.
we're at a blip right now in energy and crude oil, but shit, I mean, we're going to be back down to where crude oil is probably not worth a lot at
Yeah.
some point. I think we may be this period. Same with corn. I think eventually we trade corn back down. We'll be back down sub 350, but
Yep.
hopefully we'll be producing more bushels than we try to outproduce it. So.
Yeah, and I really like that point you made of the comparison with the stock market. I never thought of it that way. As companies are dynamic and they change. There's good ones, there's bad ones, and then they weed out. Commodities are commodities. USDA yellow number two is always going to be that, and so as you get more of that, it's a different dynamic. Um,
Yeah, it's
yeah,
it's yeah.
outside of traditional ag investments such as land, buildings, equipment, etc., what do you feel is best investment or use of spare capital for the farmer listening to you today? What industries or opportunities should an investor be looking at right now?
Yeah, we were pretty heavy into real estate. We owned several buildings and commercial properties and things. We started to scale back and sell some, obviously, into this crazy rally. And
Yep.
I suspect housing continues to push. It feels like it's going to continue to push just because from a demographic standpoint,
Yep.
I don't think you're going to have enough supply. The stock market, I I don't want to say it's overvalued, but it feels a little toppy. I mean, I
Yep.
don't, hell, I don't see any asset class that I'm just screaming to go toss money to right now. But I,
Yep.
it's funny as we get older. And I said this a lot. It's like old bears and young bulls, and
Yep.
I've said it oftentimes. The young kids and the younger people are bullish as can be, and they're fired up on everything from baseball cards and Pokemons to, it doesn't matter
Yes.
what it is,
Yep.
cars and but as we get older, it feels like we're like, there's no way this can keep going. And I hate to have that mentality, but it feels toppy. Most asset classes feel inflated, and you got to believe at some point, this thing's got to come home to roost. And
Yep.
people not wanting to work and people not wanting to do a lot of the things. I got to believe at some point that comes back around. So I've just been trying, and this is probably the wrong thing to do, but I've been trying to accumulate more dry powder just because. And I was on the phone with several banks. I'll just tell you, I mean, I was on the phone with several banks here yesterday. Can't say they were calling, and
Yes.
they told me to kind of hold on here to my horses because they think 22, 23, they're going to have a lot of repossessed properties and repossessed buildings come up. And
Sure.
they were like, and they were trying to pitch me a couple they've already gotten. And hell, I can't believe it, but they had gotten some repossessed farm ground. Thing like 160 acres, 40 acres, 80
Yeah.
acres. They said they see, they see more in the pipe. So I'm trying to get dry powder, but when you're in an inflationary environment, you hate like hell to sit on cash because if you're
Yep.
wrong 5 years from now, your cash is worth a lot less than you could have if you stuck it in something. So
Sure.
I don't know. I still see value in land. I mean, I still like buying land, and even though we're inflated, but
I know
I still see the value.
an elderly wise man that been very successful in life told me a few years ago that he said farm ground is one thing about it. He said it's, he said it's one of the safer investments, and he really recommended it for, getting to the latter half of your life or retirement years because he said, unlike a shopping mall, you don't need to update it ever, and it's there for generations.
Yep.
But what was your, just kind of to follow that up just a little bit? I was thinking of maybe some other practices of farming, or is there other ideas to pursue? I know you keep in your emails, you keep us very up to date with alternative farming practices, or maybe there's other products or commodities that can be grown. Any thoughts to kind of,
Yeah. I mean, yeah, we, I just look at the overall entire picture and the dynamic, and I feel like it's going to shift. And when
mm-hmm,
I'm on the board of several different businesses, and I've invested, in hundreds of different businesses, lots of them really bad investments, and I've learned a lot from a lot of big mistakes. But I, like I said, you really have to define where you fit in. And for me, like I said, higher yields and lower prices is troublesome for younger farmers or people that are going to have to take on big debt. And
yes,
you can equate it to anything. I mean, I remember when some guys came to me wanting me to back them in a concrete business, doing forms, setting forms in houses. Well, shit, I was young. I was probably 28 at the time, and I was going to have to take out a $500,000 loan and line of
yeah,
credit. I went out and did my investigation, and I found out there were two or three guys in the Kansas City area that they were flush with cash, owned all their own forms, owned all their own equipment, had their own trucks, boom truck. And I just sit in my head. My dad says, "You're an idiot." I mean, if prices drop out of the housing market,
mm-hmm,
they're going to be sitting there fine, and you're going to be trying to make huge payments.
sure,
Well, I learned my lesson. That was a bad experience. And it's the same though right now in farming, right?
yes,
We have our farmers in some of our farms nationwide where folks own all the ground. They have very little equipment payments. They're cash flush. Those guys can compete. They can be low cost producers. They can
yes,
really win in that low cost environment. But then there are some people who they had to just get started. They're paying higher rents. They've got a big line of credit.
yep,
They got heavy machinery and equipment costs. Well, those folks, they have to, in my opinion, they have to understand they can't be a low cost provider. They're not going to be Walmart,
yes,
and they can't beat Walmart. And they have to come up the customer continuum somewhere, and they have to grow more specialty crop. They have to maybe, we've seen people start to target direct to, end users more. Guys
Yep.
have pivoted and tried to go direct to Chipotle, go direct to a Patagonia with their cotton. And so that's where I'm a proponent of. I think you just have to know what you can do on your operate. If you think you can win as low cost producer, shit, I say roll it and
Yes.
keep doing what you're doing because you're in the driver's seat. But if you find yourself struggling when prices are back down in that $4, 350 range, well, you probably have got to start to pivot some acres or think of some other things that you can do. Farm, like I told you, remember that one? I don't know if you guys remember at my conference in Kansas City a couple of years, 3 years ago. Jamie Walters there, and he's the one that talked his old man into turning that ground in Illinois into a whiskey distillery.
Uh-huh.
And
Yep.
they make way more now on the whiskey distillery than they do, and they started growing
Sure.
different varieties of seed corn, Brazil and South America. Now he creates all kinds of different kinds of whiskey. But
Yep.
hell, a bunch of millennials take buses out to his farm every weekend and tour the facility, and he's got these big copper vats and shit. They sell them t-shirts and hats and
Yeah, for
you
sure.
know, eh, whatever. But
Yeah.
it was a pretty crazy move because they were on prime ground in Illinois, and for them to pivot, I think they pivoted 2 or 3 thousand acres now. But
Yeah.
yeah, I mean, but like they said, it's working and it's doing well. So I think there are tons of things that can be done. We kind of have to
Yes.
identify where we're at as our farm on that continuum. Can we compete? If we can't, we got to
Yes.
start looking for a few things.
Yep. Because to understand that we can create the most bushels for the lowest, lowest input cost possible, and understand where we're at on that. Um, Finally, before we wrap up and head into winter, what can growers do to be prepared for the bipolar Mr. Market this winter?
Yeah, I mean, for me, I'm pre-sold quite heavily. I've probably got about 75% of this crop already priced and sold for corn and beans. So I'll try
Yep.
and market my next 25% of corn and beans between now and next July,
Yes.
looking for a weather scare in South America, or hopefully somebody patches some relations up with China and China steps in as a bigger buyer. Maybe we can catch that run back to $6.
Yep.
But I've got enough sold. I'm not really all that worried about the downside. Like you look at wheat, hell, I'm 100% sold in wheat, and I'm 50% sold in 22, and I'm getting ready today. I'm going to send out I sold some this morning. I sold some
Yep.
23 wheat. So I'm not opposed to selling a little bit further out on the time horizon and getting a little more pre-priced. We got about 20 to 30% of next year's done. And the only thing I say is this: I know input costs are going to be smoking, right? We all know
Yes.
that they're going to be high. But when the hell? I mean, we haven't. I don't remember. Maybe I remember less than a handful of times I promised that I could price next year's corn at plus $5.
Yes.
I mean, I can't remember, but maybe 2 or 3 times, and each time I kicked myself because I didn't do it. Now I'm not going crazy aggressive, but I think you get 20, 30% done, and hope that
Sure.
like hell that's your worst sale of the year. I
Yeah.
mean,
Right.
I'd
Sure.
love it if 530, 540 corn was my worst sale. And, I beans got me a little bit bamboozled. We only got about 10% of next year's beans done, but I'm probably going to feather in some more sales up here at 1240, 1250. Just, I like to get 20, 30% price before we plant, and then start running in some, through the U.S. growing season. Because I think we get a couple South American weather scares here. We might catch a little bit of a pop. And
Yep.
my theory is shoot when the ducks are in the air. I mean, and that's what I like to do. So I sell into rallies.
Yes. And so moving forward as you go through the years, it helps a farmer anyway, for myself, to ignore a little emotion, because sometimes that's been my worst enemy, is getting involved with the fear of missing out, or there is no other alternative. So, any other thoughts or comments you have before we wrap up this episode?
No, I think it's great. I mean, I think you're doing. Yeah, this is cool. And anything I can do to help, I like helping local folks for sure. I mean,
Yes.
hell, I'd speak all over the country, but anytime I can do stuff here at home, I'd love to help you guys out. So I
Thanks.
appreciate it. And yeah,
Thanks so
thanks for the
much.
support, and hope
You're
you guys.
you're your generosity of coming on here and taking some time out of your very busy schedule. And like I said, it's been a pleasure working with Jordan and the last few weeks. And I wish you all the best too as you go into holidays with your family, and stay safe out there. And hopefully we'll meet sometime soon.
Heck yeah, I appreciate it. So yeah, hopefully you guys come up to FarmCon or something. So that'll be good.
Yes, I want to. My dad's attended, and I want to get there. So, and I,
Yeah, that'd be good. You'd meet a lot of good people there. So yeah,
yeah.
a lot of good folks.
Hi,
There'd be a ton of guys you could. There'd be a lot of good people you could interview and talk to there. Maybe you could set up a media room if you wanted or something like that. There'll be a lot of big CEOs and big
yep.
owners of big businesses in ag. So, yeah,
Wow.
yeah.
Yeah, that's really awesome, that event that takes place there. And like I said, for our listeners, Kevin Van Trump has a Van Trump report, and he puts together a lot of useful information. Honestly, I don't know how he does it every day, because every day it's a lot of different pieces of information that come, and does a fantastic job. Thanks again, Kevin, for your time, and we'll hopefully catch you in the future.
All righty, my friend. I appreciate it. Thank you.
Thank you.
If you need help with your operation, go to topagservices.com/signups to receive alerts. Hey, this is Wendell Cohen, show host and producer. This is Agronomy Moment. Thank you to all those who made this show possible. This show is over. See ya.